following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back. Let's talk futures. Joining us live from Chicago, Illinois, Jimmy Iuorio. Jimmy, how are you?
Good. Thanks for having me on.
I finally figured out how to say your name properly after
Perfectly,
like 2 years.
Yeah. Oh, by the way, so we're doing the big feast of the seven fishes on Christmas Eve, and I'm doing two fish. So I'm going to do a shrimp scampi, and I'm going to do a smoked salmon, which I know is not particularly Italian, but it's allowed, right?
Oh yeah, 100%. That sounds delicious. And what time should I be there?
Should be there at like 7. We'll go to midnight.
Oh my God, that's awesome. Yeah, we're doing I don't know what. I got to coordinate with my brother. My dad, he broke his hip, so we're going to his house, and the dynamics are a little different. He doesn't have a big green egg, so we're gonna have to improvise.
Yeah, right. Yeah, I got to smoke it at home and then move it over to them. But I do want to bring back the Italian traditions. We haven't done the Feast of the Seven Fishes in several decades, but we're bringing it back hard.
Well, whose idea was this?
It was, we saw this movie. All of us saw the movie. My siblings, I have 7 siblings, called Feast of the Seven Fishes. It came out like 3 years ago. It's about a Pennsylvania Italian town from in the early 80s. And it was fabulous. So we're all like, yeah, we should do that again. Yeah.
You have 7 siblings?
6 siblings. There's 7 of us total. Yeah. Yeah.
Wow.
Yeah.
That's fantastic.
It sure
I like
is.
that. Oh my God. I want to come to one of these parties, man.
Oh, it's fun. Yeah.
Anyway, so CPI was pretty much on target, it seems like.
So this is a big deal in what the market's movement is telling us. Okay, CPI came at 2.7 year over year, which I've been arguing is the real target. They can say they're looking for 2% inflation as much as they want. My belief is that between 2.5 and 2.8, and again, this is just thumbnail, I'm saying they are willing to tolerate a higher level of inflation. And that's what the markets are saying. They're saying, yeah, okay, they're going to ease. So by some economist standards, I will argue that much of it is government spending fueled. But by some economists will say, well, the economy's doing fine. Why the hell is the Fed easing? And I have an opinion about everything, as you remember. But my opinion on that too is that they're probably trying to lower borrowing costs from the federal government. And we are going to run bigger deficits in 2025 than we did in 2024. All of Trump's solutions to that are on a time delay. The demand part of it, lowering taxes, we should see less tax revenues in 2025 with the hopes of more tax revenues in 2026. But there's a lot of interesting things going on, and I think you got to be long stuff. This is stock market. I see no reason not to be long it still. What are those 3 moving averages you have drawn in?
So, these are on my dailies. I'm all Mike Arnold all in. So I've got the 8 exponential, the 21 exponential, and the 50.
Yep. So do I, by the way. I'm Mike Arnold all in too. And I hate when like you study someone for a couple of years and you're like, oh yeah, I've been doing things slightly wrong. I guess it's good. We're supposed to adapt as we move on. But Mike Arnold's moving averages are the best. And the fact that we're coming out of the 8 and 21 rotation zone, still comfortably above the 200. Yep. Would I like to see a settlement above that box you drew in? Sure. But I'm still a bull anyway.
Mission Control, can we show that chart real fast? All right, there you go. Yeah, I mean, how do you not be a bull on this chart? I mean, it's, I think a close above that, the all-time high wick up here, or even less than that, a close above my rectangle, which is, pretty much 6,100, it could be off to the races.
I believe that too. And it's very, very funny. And so I trade like of different portfolios. I trade the short term and I trade the medium one actively. I even invest my long term one, but I have a very, very strict rule that I rebalance at the end of the year. So I had to sell out of some positions just to stick with what's worked for me over the years, which I hated doing because I'm still a bull. Yeah. So many of them I replaced in the medium and short term with option strategies that just the other day on Monday, bought options in, bought calls in Google, bought calls in Apple, bought calls in the SPY, things that look good to me. Because I still, again, I'm pretty much a bull still.
So they would say you created a synthetic position. You got
I
out of
did.
the equities, and yeah,
Yeah, right. So
that's
like
awesome.
I sold what I was actually long and owned, and then I rented a long position for a shorter term because I still believe in this move.
So going back to CPI for 1 second. So the Fed funds tool is saying, hey, 95% chance we're getting a 25 basis point rate cut next week. But calendar year 2025, this tool has been consistent saying, no, we're only going to do 2 more cuts. Terminal rate's going to be 3.75 to 4.0. End of story. That seems to be sticky.
Yeah, no doubt about it. And consider that they had just a couple short months ago, they had a target of about 2.7 in Fed funds by the end of 2025. So it's been consistent for 2 years that we price in these wild, okay, easing cycles starting, but the economy keeps surprising to the upside, which by the way, is an entirely different and nuanced discussion because I do think there's some problems with the way we measure it. But right now things seem pretty good. And if you would have caught me 2, 3 months ago, I would have had a totally different investment strategy based on how I thought the presidential election was probably going to go. It is odd. Everyone will say, well, it doesn't matter who's president. The stocks and bonds behave similar ways regardless. I disagree this time. I think this was a massive showdown between two very, very distinct economic policies. And I think that Donald Trump's going to get tax cuts passed within the first quarter, which means deficits are going to go higher, but economic activity could boom and help all these different assets.
Yeah. Well, we'll see. Yeah, we'll see how it goes. It's going to be definitely there'll be some differences for sure.
No doubt.
I have a measured move up here to 61.85 in the spoos. I don't think we're going to get there, but there was kind of an ABC. I mean, I think we'll get there, but maybe not by the end of the calendar
Sure.
year.
Can we go down to a 60-minute bar and let's see where I would think entry points is? Because when I look at this, I say I probably want to see it settle above that level before I get in. But
Yeah.
I think there's still probably opportunity even before then that I might get in a smaller position. Now
All right,
that's
let
a
me open this
60-minute
up a little bit.
bar.
Yeah, let me clean this mess up.
Yeah,
Yeah,
but
it's
all it's
60
telling
minutes.
me is that I missed my entry point, I think.
Yeah. Yeah. Well, that number, man, I mean, it seemed to love the number. It just kept going. It did.
Yep.
There was no retracement back down. There's no pause. It was nice, and it wasn't even an orderly rally. It was an excitable rally.
Yeah.
And we're still, yeah, we have a wick up here, but I don't know if it's done yet.
Yeah, I don't know if it's done yet either, but I do know that like that 2 bars ago when it was breaking out of those, just long consolidation of 60-minute candles, sure,
Yeah.
that would have been a nice time for me to buy it. I did not. I am long some call structures above that are starting to look pretty nice that I cannot decide what to do with. But right now I do nothing with this chart. You agree with that, right?
Yeah, I mean, I'm just looking for places to buy. I mean, right now I'd wait, I'd be patient, see if we get any kind of resistance at the top, and see if we get any kind of pullback, and then try to get in again. But
Bingo. Pull back to where you just had it. Like not where it broke out from today. A little lower than that. A little lower, right around the tops of these candles. Yeah, right
There.
around there. We get a pullback
Yeah.
there. That seems like a significant level. We had a lot of those, a lot of resistance there before, and we blasted through it like it was nothing. So we come back to there, we trade around it a little bit, and then start moving higher. Boom, I get in. Yeah.
Yeah, and a lot of times what I've noticed is when you have these little tiny volume deficits, I like to think of them as gaps. I know they're not a gap, but I like to think of them as gaps. And a lot of times this volume gets filled in throughout the day. So, as this volume profile looks really bell-shaped curve, really nice. I have my radar screen is right there.
Okay, that's interesting. So it gets back down there, and you think that's a spot to buy for a short-term trade?
Yeah, I mean, I would go closer to the volume peak, a little bit lower, but yeah,
Right.
I think that area could fill in pretty
Good.
nicely.
And then when on the daily, if you guys remember back at it, you don't have to go back to it, but settlement above the gray box, which is above those wicks, then I think
Yeah.
it's off to. Oh, it's easy to go back. It's a nifty system you got there. Settlement
Heck yeah,
above that
man.
box. I'm ready to roll.
All right, all right, let's talk about the Dow just because United Healthcare. I mean, this is I think I actually have United Healthcare is down 4.82% again today. It's dragging this thing down. It's trying to resist, but it's having a hard time.
So I think, it's kind of on that trend line right there. I think right now, like gun to my head, I certainly wouldn't, but buying it might be interesting. But particularly if you think, one of the reasons I hate trading the Dow, by the way, is some of the outsized influence that one name has. So some people would just say, well, just trade that name. That being said, It's a hell of a move that we've seen in United Healthcare. Drag the Dow down. I personally think right now it's coming into some nice support, but I want to see a 60-minute bar to see where I think a day trade for me would be, which I know is going against the grain. Can we see a 60-minute?
Yes, sir. Give it a second. Give it more than a second. Come on, computer. Maybe we can't see a 60-minute. Let me see what happens.
Can't be user error because you're one of the smartest guys.
No,
No,
it's not.
there it
It's
is.
not
I
my
saw it.
fault.
It
Well,
can't be
you're
your-
like, I know, 60-minute. You're throwing me off my game here, but that's right. We got it. All right, here we go.
See, I think there's movement on the upside to retrace the two previous candles. Yeah, I don't think I'm buying it here, but I think it's going to be, there's some resistance in the candles from about 6-7 candles ago. There's a little bit of a line, but
Yeah.
if I had to make a move on this right now, can we draw on the Mike Arnold lines?
Yeah, that'll take a
No,
little
then
effort.
don't. That's
Yeah.
I like this here, particularly above that wick that it put in on the next bar, perhaps. And I think it's time to take this. So the Dow is basically steady. Yeah, right in there. We can settle above there. I think we go back to the high of those bars from before, and probably the highs to the ones on the upper left too.
Yeah, and that's pretty close to the piercing line or the midpoint, which is a thing in technical analysis of this
Right.
big candle here.
Yeah.
So I like that. Yep,
Yeah.
I do too. Again, I want to see a break. I want to see strength above VWAP before I get too excited. But
Yeah.
all right,
Yeah,
well,
I
let's see
get
what
that.
happens.
Yeah.
Yeah. All right. The other surprise I had today was gold. Gold
Okay.
is like up $40,
And
and we're
can we talk
breaking
about
out to
gold
the
and
upside.
silver then as well, by the way?
Yeah. Yes, we can.
Yeah.
I mean, gold
So-
right now, boom, we're breaking out. We start closing above this old area of resistance. It could be off to the races.
No doubt about it. That is my level where we're at right now. I think there was a consolidation and a nice little triangle that we broke out from 2 bars ago, and
Yep.
we won't look back. Remember, this whole time going into the election, I had thought that one candidate was fabulous for gold and one candidate was pretty good for gold. The one who was fabulous for gold did not win the election. So in the short term, I think the market is now realizing that Donald Trump is still pretty good for gold. I mean, he doesn't plan on cutting back spending too quickly. I know the Doge, whatever, wants to cut $2 trillion by next year, but he does plan on kickstarting economic activity through pretty massive tax cuts right at the start. This could be somewhat inflationary. We already know, we discussed earlier that I think the Fed is comfortable with 2.7% inflation. If that's the case, then dollar hedge instruments should do pretty well. Gold, by the way, gold is not my favorite in this. I have a lot of gold. I have gold, physical gold. I have paper gold, and a settlement above this, above that line you drew, I think is critical. And I think any strength the next day beyond that, and I'll buy it. I'd actually be looking to get long it now. Can we see a 60-minute?
Yeah. No, I agree with you. Let's go over to 60-minute. I cooperated. How about that?
Oh, look at that. It looks like you're boom.
Yeah.
Okay.
All right. There's our 60 right now.
Yeah, nothing, any sort of great entry point to me. I'd rather be long it than short it. Can we go back down to a 10-minute, see if there's anything cute there?
Yes, sir. Easy peasy. Again, orderly. I mean, this has been a really orderly rally, man. I mean, it's
right. So it's hard for me to get in it now. So I may in order to increase, I may wait till it settles above that that zone on the daily chart, and then look for any strength beyond that, and I might increase my longs. But I said before, remember, I don't know if you heard me, I said gold is something I really like in this environment. Silver is something I like a ton more.
Let's go to silver. Yeah. Silver is also on the move up over 1% today. Yeah. Again, this is a really nice retracement back up. We're going to close above Mike's 62.5%, right. Which then turns this trend around.
Turn this trend around. So a close above 62.5%, close above that box you drew in there, and then any strength tomorrow, I jump back in. You want to hear something that is irritating? And you know, I'm long silver, way long silver. I had to stop in to buy silver when it broke 2 bars ago, when it broke out of
Yeah.
that little pattern. But I had it
Yeah.
in one of the ETFs, not in futures. This is going to be why you use futures. And the market was essentially closed when it blew through. And by the time the markets opened in the morning, it was beyond the limit of my stop, which is fine. I'm still, as anyone who watches me and knows me for the last 3 years knows, I'm long an uncomfortable amount of gold, silver, and copper to a certain extent. But I wanted to get into more silver, and I still do. So here's why my next trade then, and I'm going to use futures this time so I don't run the risk of losing it when the ETF is closed and illiquid, is a settlement above here and then any strength tomorrow. And I think we go back to challenge those highs in the left, which is what? What's that level?
35.
Yeah, that's where we go, in my opinion. And I think, and again, the fundamental thesis for silver is like silver occupies this weird vacuum. Like it's usually viewed as a precious metal, but it does have some conductivity elements to it and some industrial elements to it as well. So if the market can't decide when the transition is going to be from precious to industrial, sometimes they make a compromise and start to buy silver. And oftentimes that's why gold moves strong and then silver tends to catch up very, very fast. And I think it's going to be doing that right now. I think 35 is easily in reach.
Well, yeah, I mean, this is quite a breakthrough, quite a break out to the upside. And with again, yesterday I thought, well, maybe there's going to be a little bit of a stall here because we didn't get such a dramatic big continuation buying. But today it shrugged it off and just kept going.
Right. And again, if we're in a situation, I know I often talk about Larry McDonald's book, How to Listen When Markets Talk. And he went through all the data on if we're really in a period of somewhat sustained high inflation. And he's not talking about 5% CPI, he's talking about high twos. Commodities tend to outperform most everything else. And I believe that we could be in one of those situations right now. And that's why I've slanted more towards these metals than I had in the past.
Yeah. Speaking of commodities, OPEC came out with their monthly report. I'm going to shift over to the January crude contract.
Sure.
And, this isn't a surprise, but their monthly report said they've lowered their estimate for demand for 2024 and lowered it for 2025.
And crude's up 1%.
Yeah, and crude's up 1%.
So the market's telling us that crude does not care that much. And by the way, but the print, the 2.7 print that the other markets are happy with in the CPI is probably pushing and fueling crude to the upside right now, because Donald Trump is viewed as a drill baby drill president, which could help supply of crude. But we all know that those supply side solutions, particularly in this sector, don't manifest until 12 months to a year.
Yeah.
I mean, 12 months to 2 years from now. But the rapid tax cut, particularly in the business and the individual tax rate level, those can spur demand rather quickly on the short term. So I believe this is just a time frame thing. The crude market is telling us just in the last few days, okay, just because we are going to be opening up these wells doesn't mean in the near term supply is going to swamp us and knock us down. So I think crude, again, I'm not trading this until it goes above that line you drew, which is, and the highs from about about 5 bars ago, until it settles above that. It doesn't have to settle above that top candle, just above the candle of the white, above the wick of the white candle. And it settles above there. And I think the breakout is complete, and I think it heads back higher. And I don't think 75 is out of the range.
So what do you think? Sterling Smith, a couple of minutes ago said, as long as crude's below $75, the U.S. economy is going to be great.
Yeah, I agree that too. It doesn't start to drag. I would even have put it higher than that. I think that 80 is when it starts to drag quite a bit too. You know what's very, very funny about crude, and Bobby and I have argued about this forever. Everybody thinks it's this, okay, if crude goes higher, it's inflationary, and that hurts us from an inflation point. I say if crude goes higher too, it can, on another level, be slightly disinflationary because it's taking so much money out of the average consumer's pocket at the pump. And the same conversely happens too. When crude goes lower, great, because crude's an input cost to everything produced, but people have more money to spend on other things too. All I'm saying is just, I'm not saying that it's not inflationary, deflationary based on the traditional way of measuring it. I'm saying it's not as clean as people think it is, because there is a smaller yet significant argument on the other side as well. Does that make sense?
Yeah, it's a substitute, right? You have to spend more money on gasoline and you have less money to go out to dinner.
Right. And a lot of that money goes to overseas as well too. So yeah, that could clearly happen. But there's a trade here that's coming soon, and I want a settlement above those levels, like I said, and then strength the next day, and that's where I may jump in. So what's that level right there?
So 70
69.
bucks is like where that blue line is right here.
Yeah, let's make it $70 just to make it easier. A settlement above 70,
Yeah.
now 70.50. And a settle above 70.50, and then any strength the next day. And I think 75 is coming. And I don't think it really starts the narrative of hurting the U.S. economy until 80. I don't like to disagree with Sterling Smith. He's a smart guy, though. But yeah.
Oh yeah, he's awesome. I love this guy.
Yeah.
But so if you get a close above 70 half, then the next session we start rallying. Do you wait for that bar to close, or do you just get in?
No, that's why you can't keep waiting for everything. You know what I mean? So I just get in once we start above it. It's nice to have this blueprint for trading of it's got to settle here, it's got to settle there, then it's got to settle. But at some point in time, you have to jump and pull the trigger, as we know.
Yeah. Ooh, I gotcha. All right, we got it. I got to ask you about the Bitcoin, man.
I've heard about the Bitcoin. Tell me more.
The
What is this
Bitcoin.
new technology you kids are talking about?
Well, did you hear about the new super chip that Alphabet has? It's gonna be able to mine all the Bitcoin in like an hour.
Yes. Which, by the way, on Monday of this week, when I got out of some tech names, I got out of AMD. And by the way, I'm not licensed to recommend individual stocks, but you all know I trade a crap ton of them. I got out of my AMD because the chart looked bad. And then I looked what charts looked good. It was Google and Apple. This is Monday. And I sold some 185 by 190 call spreads as a 1x2. So long more of those 190 calls. And all of a sudden it's like, holy crap, this chip comes out and the market goes through. It's one of the better trades I've made all week. It's better to be lucky than good. But the technicals did favor it. What are we looking at again? I totally forgot. Oh, the Bitcoin.
So yeah. So this looks like we're going to drive well. And now again, the cash Bitcoin is not over 100,000 yet right now, but the futures is the December and the January, and we're like still trying to track higher.
So this is what I think a key level is going to be about 105. This is above 100 now, right, in the futures?
Yeah, we're tracking right now 101, 215.
Okay. So we talk about on this show all the time is everybody talks about psychological numbers, and psychological numbers draw headlines and draw broader adoption and interest. But that's not why I watch them as closely as I do. If 6 months ago you're putting on options trade in the Bitcoin, you're using that 100,000 strike. You don't think about a 99.5 or a 98.5. Yeah. There's tons of option open interest. And I haven't even checked what the actual numbers are because I don't care. Because I think if there is, which I believe there probably is, and the market believes there is, once we get to 105, 106, we could see a bit of a gamma squeeze. And that's what and for those who don't trade options out there, it means if you're short a crap ton of calls and you're comfortably short them for 6 months, and all of a sudden it gets to your level and you're like, okay, still fine with these calls. But then it gets to 105, you're not fine with them anymore, and you might have to start coming back in to buy the underlying. So I believe that's going to happen on a trade of 104 or 105, and I think that's what pushes us up to the next leg of 115 to 120 in the Bitcoin. And again, we all know that the fundamental thesis is institutional adoption. The U.S. government has talked about openly about a strategic Bitcoin reserve. This is a big deal when they're doing that. Remember, so BlackRock, who's the only institution that's more powerful than the U.S. government. And again, that's a joke, but it's not as much of a joke as I would like it to be. But BlackRock's already well in the space. So we got the blue blood institutions and now the U.S. government coming in. So that to me is a big tailwind for Bitcoin, whatever the hell it is. And this whole time, I don't really care. I've been long Bitcoin for 7 years, just based on the notion that you have me on poor stewardship of fiat currency. So I have that in my portfolio. And I like to trade still.
Yeah, I've heard that. I read this might have been in the Wall Street Journal this morning, or maybe not. Maybe the day before. BlackRock and what's the other one? MST or no?
MicroStrategies.
Yeah, that together they own like 10% of all the outstanding Bitcoins.
Okay. The MicroStrategies thing is starting to scare me because extend that to natural end. Let's say they at some point in time own 40% of it. If ever a time comes where they have to sell, Jesus, the bottom will drop out of the thing. Now the BlackRock thing is not as concerning to me just because that represents a ton of people, different entities, whereas MicroStrategies represents one entity. And by the way, I have hedged my Bitcoin longs by buying put spreads in MicroStrategies. And I may do that again if it gets to levels that I think are precarious and I want to protect some of my gains, because again, MicroStrategies is a leveraged Bitcoin play. Which, why the hell do you need a leveraged Bitcoin play on an asset that whips around like it's up 45% since the election on November 5th? It doesn't seem like there's a real need in my world for a triple leveraged Bitcoin. And by the way, if you are out there saying triple leverage Bitcoin, sign me up, you might want to look in the mirror and talk yourself off the clear, because that is very much a cowboy strategy. And Jim and I have been in this business a long time. You know, the bulls can make money, bears can make money, pigs get slaughtered.
Yeah. So you mentioned gamma squeeze here, 45% rally. Is there even enough places for the dealers to hedge on a 45% move on this relatively new marketplace?
So you're saying is that, okay, so if we whipped up there so fast that perhaps they were hedging, okay, and that's fine. And that's why, by the way, I said that I might, because that's a great point. And there might be some level of truth to it, or a lot of level of truth to it. But I do think the market there'll be plenty of people in there to front run it if there's anything left of the short call positions. You know, it's like China and copper. It doesn't always matter what the nuts and bolts are of the trade of China's demand or lack of demand. We are so conditioned. Negative headline from China, sell copper. Positive headline from China, buy copper. So at some point in time, the mechanism within markets is more important than the actual fundamental story. And that's where technical analysis comes in.
Yeah. No, I hear you. I hear you, man. That sounds awesome. Yeah, I don't own any Bitcoin. You know, in my lizard brain, you know, it was like $5, oh, I can't go any higher. $10, oh, I can't go any higher. $100 can't go any higher. I missed it.
Well, again, you've been in real estate, you've been in metals, you've been in things that have performed pretty damn well. It's not like you miss it and you struck out. There was other ways. If you were in the Mag 7, you're doing just fine.
Oh, yeah. No, I don't feel sorry for me, but that's my experience anyway. So, Jimmy, this was great. I appreciate you taking time out of, I know you're super busy. I'm not leaving.
I want to go another hour. Let's go. Turn those cameras on. Let's go.
I know. Well, last CPI, you were like, all right, I got to phone a friend. Bob, you got to get in there. This CPI number was driving my customers crazy. This time, not the case.
No, it was driving a little crazy. My two partners are like, you're going where? You're going to do what? We got orders working, but I'm fine though.
Yeah, awesome. All right, man. Well, I look forward to talking to you again. Appreciate your time today, as usual. Best place for people to find you, Twitter and
the Futures Edge podcast, which I also post all the links on Twitter as well. At Twitter, it's at Jim Iuorio, JimIuorio. And thank you guys for all the support on our podcast, not just Ninja Traders, but you guys who are watching as well.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.